The Americans voted for a new president, and essentially they voted for change. And Trump has come into the seat to disrupt. He's talked about making America first, and that has implications for defense companies, not just in the US that serve the rest of the world, but international defense companies that will now have new markets to serve. We're seeing a huge transformation in the defense sector at the moment, and that's primarily around the modernization of warfare, moving from land, air, and sea into space, digital and genomic frontiers. How you manage your investments into defense or how you hedge your positions are going to be important. This is a growth opportunity. Since the Russian-Ukraine war in 2022, the MarketVector Global Defense Index is up over 100%.
A lot of the spending growth in defense over the last year has really come from supplementals, which have focused on Ukraine and Israel, as well as the delay in outlays. So each of those has contributed about 3% growth, so totaling about 6%. And if you think about the base budget on real terms is down 1%, so all in all, defense spending has grown 3 to 5%. The way we could see the Trump administration impact spending globally is primarily in Europe. Certainly, we could see European companies spend more if the US decides to pull back. The second area where we could see defense spending change is DOGE. We don't know how that'll impact the companies yet, but where we're focused is the IT services companies. We actually think it could be a long-term positive for the IT services names, but given our ratings across the space, we think it'll be a negative shorter term.
We're also seeing warfare that crosses geopolitical boundaries, and these are cybersecurity risks. It's creating demand for a different type of military defense company, and those are going to be those that specialize in analytics or data or AI. Investors should really differentiate the companies within this broader aerospace and defense industries, because we're seeing performance difference between companies that are servicing kind of these emerging technologies and those that are more diversified across kind of old segments. One of these companies is Palantir. It services data, AI, analytics. And if you look at its performance, up 300%. And one of the reasons is because it's producing really interesting work in the AI space, and it's involved in this AI narrative that investors are looking at, but its primary funding is from the government, which means it has a stable, more reliable source of funding. So Palantir, huge performance, but a PE of also over 300. And so investors should also be careful when they're looking at the price they're paying for a company, whether or not a lot of its future performance is already priced into the current price.
Another name investors should be on the lookout for when it comes to negative implications could be Lockheed, not only for multiple risk with DOGE and Elon Musk's views on fighter jets, which obviously F-35 is a 20% program for this company, but also you'll see pullout with boots off the ground, so it could see deteriorating missile sales, which represents 20% of sales, and their space business directly competes against Elon Musk's business as well. So this is a relative name that we think could underperform under the Trump administration. In terms of some of the offsets for Lockheed, we could see a benefit from European funding. Lockheed has 10% of sales from Europe, so you could see more F-35s go into Europe if the US decides it does not necessarily need them. So there is some negatives in the US we think will hit the largest contractors, and investors should be on the lookout for. The positives is they could see some benefit from European spending, but not as much as the local contractors. One of the biggest risks for defense during Trump's administration could be funding that is necessarily lower than global GDP growth. And so, especially as the administration really focuses on cutting costs, this could be a potential issue for the contractors. The geopolitical uncertainty that could change the trajectory for a lot of the US contractors is really Asia-Pac. We've been so focused on the Middle East and traditional land wars, but Asia could be another risk item. China has publicly stated that in 2027 it will attack Taiwan. So although this has put constraints on defense funding, we could see a tick back up very quickly as China makes aggressive moves. For 2025, investors should be on the lookout for IT services focused on AI, cyber, defensive technologies.